Welcome back to our show, your show, Let's Talk Stocks. And joining us again in studio to continue a very interesting and intriguing discussion is Mr. Ryan Strachan. He's Vice President at GK Capital. And of course, he's sharing a wealth of knowledge about what is happening across capital markets across the world and locally as well. Welcome back, Ryan. How about the stock market? I think certainly has the Chinese markets been overbought since the stimulus? I mean, kind of, what are you seeing?
Overbought's a tricky word. It's hard because that would mean I would have to have a fair idea of what a fair value is, and it's difficult to assess. Okay. What I can say though is, most certainly from a consumption standpoint, there are still market movers. Their ability to consume, to invest in capital projects, even in Jamaica, is noteworthy and cannot be overlooked at any point. I don't know if that's going to translate into their becoming a force that we can say, okay, the average consumer or investor can now go and deploy capital there. Yeah. Because the fact is, an edict could be passed tomorrow where they say no foreign capital can leave.
That's true.
Right?
That's true.
Or you have to convert your US dollar holdings on an ADR to the yuan, or yuan, or however it's pronounced. And that is what gives me the greatest pause. Yeah.
Let's take a look, Ryan. You hinted at it earlier. Yep. The geopolitical tensions in the Middle East. OPEC Plus is supposed to begin putting more production out there later this year.
Yep.
How are the events likely to impact oil prices and bigger picture?
This is free advice, so I'll give anybody. I think they say oil is up 10% this week.
Yes.
I think anybody holding oil in the profit would do well to take their profit now. There's two reasons. I've been harping on this for about 5 years. So oil prices are driven by supply.
Yes.
So OPEC Plus has tried to control prices via managing supply. Forget that it's not just Saudi Arabia and Russia now, but you have smaller economies that are much more reliant on oil sales. So we'd have seen Trinidad go from a robust business leader, they're not in OPEC Plus, but illustration, to having their challenges with even finding US dollars, because oil prices would have fallen in 2014 and such did their fortunes go. So they can never stop pumping. Right? Two things have happened to OPEC Plus. Well, one big one. Two. Shale in the USA took the supply out of their hands, OPEC. Yeah. It made the US a net exporter for the first time ever. Especially to China, $1 billion a month net exports. That's one. Two, a country close to ours named Guyana. Right? So, is supposed to produce, I think they produce 500,000 barrels a day now. By 2027, should be at 1.2 million barrels a day. We went over this. Yeah. That was the exact size of the production cut last time. Right?
Yes.
Nobody is going to tell Guyana to not pump.
No.
Right? Total is supposed to buy into Suriname oil fields to the tune of 10 billion US. Yes. Right? So supply is pretty soon not going to be a challenge. Most certainly in our lifetimes. That is going to continue to put pressure on our prices. That we're at 71. So if you remember, it's now going to 78.
And you haven't touched Venezuela.
We haven't touched. And we're not even in a Venezuela that we can access yet. Right? No, that basin is what I think is going to be the new era. No, what that says, is that's Latin America and South America. That's part Latin
Yeah,
America, Caribbean,
Latin part,
South
South.
America, CARICOM, right? There's going to be an opportunity for a country in that space to rise as a business center. You want to guess which country that is?
Guyana.
Guyana. But Jamaica too.
Yes.
Because we're still a leading capital market between Central America and the Caribbean.
I like the fact that you segued, even without realizing, we went
We
right
are.
into
We are.
Guyana, the new leader in the Caribbean, because of oil, and Suriname
Yeah, of course.
as well.
Yeah.
And I've seen the collaboration between Guyana and Suriname already. Jamaica is known already in Guyana. I mean,
Yes.
the conferences, another
Yeah.
conference is coming up. What does this mean for the CARICOM region in general and Jamaica in particular?
I'm convinced that Jamaica is going to be the business hub. I've said it already, between the U.S. and South America, Central America. English speaking, we have capacity, we have depth of capital markets, we have U.S. dollars. I would not like Jamaica to discover oil, that's my own view, for other reasons. We can get to another time. As a financial services hub, there's no better location or country for that purpose. The thing so Exxon had reported, I think yesterday, so they've wildly profitable off Guyana, the venture in Guyana, very risky venture. They put, I think, 180 million US on the line in exploration. Or maybe even more than that, probably quite a bit more maybe. That did not have to bear fruit. So credit to them that they've made some, they're making money on their investment now. Unfortunately, Nielsen, and you know this as well, the average Guyanese is not feeling the boom.
Nah.
And that is going to be the biggest constraint, because you have the country building up, and it's going to take about 5 to 7 years to build out, because they're way behind, right?
Yeah.
The country is being built up gradually, but it is actually more accessible to foreigners.
Then,
So you go to the Marriott, locals can't stay at the Marriott, it's too expensive. Right, taxi drivers tell me that all the time. So what it does is facilitate foreigners participating in the country now. Do they stay? Do they just pillage it? Remains to be seen. It's actually similar to Trinidad. It's just that the government in Trinidad, by virtue of how they had structured their affairs, had more capital to deploy in businesses connected to the government
so there was more share
for
across the economy.
as long as oil lasted. But no, that's gone. You still now have some challenges in that respect. So now the money is in the hands of a few. Regardless of what people said, the average Jamaican has a better quality of life than the average Guyanese or Trini. It's just that the wealthy are fewer, but they're at the top, so that's why the GDP per capita seems much higher. And that's why I don't want oil, because I think that could worsen the distribution locally. And it'll be driven by foreigners.
Yes.
So as I said that to say that Jamaica has more to drive equality, such as a robust stock market, such as access to US dollars, such as infrastructure spending in particular spaces that I think will uplift, like in the rural areas. Because in some of the rural areas of these other countries, it's still you don't feel it. You see it in the capital city, the resources, but you don't see it outside. Here we have a Montego Bay, where you have Draxhall now, and it's more St. Thomas.
Draxhall is expanding so rapidly.
And you have it in more areas, so it's a lot more equitable. And that's so it's now raising the floor.
Yeah.
And again, I come back to it. The average Jamaican can come and spend $10,000 and buy Trans Jamaica at $1.40. That's not happening in Trinidad. There's still exclusion.
Okay.
And in Guyana, you don't have a stock market of consequence. And that's what's missing. And I think that will allow locals and foreigners to play the same game over here. I think for us, it's just a matter of continuing to spread knowledge and making information accessible. And then we'll continue to see the effects. Because wealth creation has to be a function of risk plus reward.
Of course.
You have to take something you have, put it into something,
In order
and see it grow.
Jamaican stock market. Well, capital markets in general.
Yeah.
We saw how the interest rate would have impacted some of the financial sector companies.
Yep.
That is changing, but will the bond prices change quickly enough? Will the bond holders, how will they fare?
Right.
Even before we go to the stock market itself.
Jamaican bondholders in terms of, that's a loaded question. So which bonds we're talking about?
Well, just let's look at local first.
I mean, I don't.
So we've seen, for instance, there's been a big foray into using bonds to raise capital.
Yes.
For other projects and so on.
Private sector bonds.
Yes.
Right. No, I think that will, to the extent that the capital projects are bound, we'll see some of that. I think there's an issue though. The banks and the investment banks are both fighting for the same thing.
Yes.
Because the projects now can be funded via a structured note, commercial bank loan. Who wins? Right? Because there is borrowing, loans are up at that mortgage level, but there is some softening.
Yeah.
But some banks, like one of them in red, has a lot of capital, a lot of cash in hand to deploy.
Yeah.
And it doesn't suit them to hold it because they have expenses. So how do they deploy aggressively? Who's going into their walls to take money? Is it too cumbersome? To take too long? Do you want personal guarantees? I don't want to give you guarantees.
Yes.
Do I know, say, all right, I want to go to the capital markets? Because a lot of the public markets, a lot of the bigger institutions, are now habitually floating bonds.
Yeah.
Now, will they do more with a falling of rates? I'm not sure. Well, it was said, actually, I'm lying. It was said last week at an AGM for a strong listed company that with rates coming down now, they are more inclined to take out a facility in addition to cash in-house to retool their bottling line. Do I expect an increase in the take-up? Yes. Do I expect an increase in them coming to in companies coming to market for capital? Perhaps. Because, there's thought that, oh, well, my stock price not moving. Yeah, but the fact is the company should not be as concerned with the stock price as it should be concerned with the capital needed to grow its operations.
That's true.
So the stock price will follow earnings, which says to me that, so I'm not concerned about interest rates and stock prices. Because if the companies grow,
the companies are increasing their profits.
Price must
They
follow
will
at some
expand.
point. And if it doesn't follow, you buy until it follows.
Because you're buying value.
Of course, because then at that point you say, when you're going to wait till it starts to move to buy it, that's counterintuitive. That's not how you invest.
And you'd be buying at a significant discount.
Absolutely. And that's how you build wealth, which is why I say when you have persons not on the stock market, they're losing out.
Absolutely.
They are losing out. And that needs to be communicated to them.
This third quarter,
Yeah.
I think for the month of August and September, the market is actually up.
Okay, I haven't watched it that closely.
Yeah,
I watch individual
I
companies.
know
I think, yes, it's not surprising that it would be. I mean, it's still yet to recover from COVID. From what I'm seeing, there seems to be, in the not so distant future, a series of events that should drive increased attention in the markets. If you would have seen in the papers on a Wednesday, I'm not sure I want to say this publicly, but it was said, so I'll say it. CMEX sold its DOMREP operation, I think, for $200 million US.
Okay.
CMEX owns Carib Cement.
Yes, they do.
I think they had another sale because they said they were, it may not be Damer, but it was a country that was 200 miles in number. I think it's Damer. They're shifting their focus to another area. I don't remember, I didn't look at it that closely. The question it begs is there be something happening with the operation out here? Will there, and as well that stimulate interest, because they would have bought it, I don't know what the price was, wherever it was. It's likely below where it would be sold. And they've turned it around and whatever. Will they sell TCL, Trinidad Cement? These are the things now that could emanate, tends to drive interest in markets, because then all of a sudden people start to look and say, oh, what's the next acquisition target? When they should have been buying before all this started. Because the value was inherent and existed prior to any announcement or any assumption. So I do indeed believe there's going to be increased interest. I do believe that dividend stocks, as I said before, are going to go up in price consistent with the fall in interest rates. Because the minute you have a dividend yield eclipsing the central bank rate, it
makes sense.
It's going to revert to what the spread was before, because the assumption has to be that the central bank rate is going to be perhaps somewhat higher than a stock dividend yield. Well, should be, but let's see. Okay, if it's not, then why would people just not ignore CDs and go buy the stock?
Yeah.
Right? So if it's not below it, then okay, just go buy your favorite bank stock that pays a dividend.
Interesting times, Ryan. I said they're giving me the wrap-up signal, but final words, what would you want to leave on the minds of investors?
I think investors should look at the market in terms of profit, earnings growth, opportunity for 2 to 3 years going forward. Be mindful of making decisions based on what the herd is doing. Think for themselves. And profit.
Couldn't have said it better. Well, you've seen the changes. It's very interesting times going forward. Ryan is telling you, pay attention to the value, the intrinsic value, the fundamentals in the stocks that you buy and across the markets generally. But that's why we do this show. That's why we tell you every day. We give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another very interesting program lined up for you.